I've had clients who like to do it because we can skip 2 months on the mortgage payment and they get their impound account money back from their current mortgage. While they're adding some money onto their loan amount, they are going to be skipping 2 months on a payment in most cases, and then also getting a little influx of cash.
If it's no appraisal and no income documentation needed, what is needed?
Just the housing information, as far as the current mortgage statement, homeowner's insurance, property tax bill, HOA statement if there's any HOA statement, last 2 months bank statements, a copy of the note from the original loan.
What happens if the value of the property drops? Can they still implement this IRRRL?
There's no appraisal needed, and they're looking at the lower interest rate on the mortgage payment. That's going to put the veteran in a better financial position, and that's the main point of the program.
Today, we're going to be discussing one of the most valuable mortgage benefits available to veterans and active duty service members, the VA Interest Rate Reduction Refinance Loan, better known as the VA IRRRL, that's spelled IRRRL, or the VA Streamline Refinance. Now, many veterans don't realize that they may be able to lower their interest rate, reduce their monthly payment, and simplify their mortgage without going through the traditional refinance process. To help us understand how the programs work, we're joined by Michael Yates with My Home Lending, who's an expert with extensive experience in helping veterans utilize their VA loan benefits. We'll discuss who qualifies, how the program works, common misconceptions, costs, timelines, and how veterans can determine whether the VA IRRRL makes financial sense in today's marketplace. So whether you're a homeowner, a veteran, a real estate professional, or someone interested in mortgage refinance, this is an episode that you want to make sure that you watch until the end. Welcome back to the show, Michael. How are you?
Good, Jose. Thanks for having me again. Appreciate it.
Okay. So what does the VA IRRRL stand for? Which I think I already mentioned it.
So it's the VA Interest Rate Reduction Refinance Loan. It's a streamlined process for any current VA buyers, and it streamlines the process with no appraisal needed and no income documentation needed.
Okay, so if it's no appraisal and no income documentation needed, what is needed?
So what's needed is basically just the housing information, as far as the current mortgage statement, homeowner's insurance, property tax bill, HOA statement if there's any HOA statement, last 2 months bank statements, and then one thing that we also need is a copy of the note from the original loan. So that's something that people can find in their previous set of loan documents. It's a 3-page document. If they can't find it, they can normally call customer service from their current mortgage provider and say, can you please email me a copy of the note?
Amazing. Is employment verification required?
It is. We put employment on the application. We do not put the income. They will call and make sure that the person is still employed. And if they were retired at the time, we don't need to verify anything there because they were retired before. So as long as everything fits the same profile as before, we should be fine.
Is a credit check required?
Yes, we do a credit check, but on the Streamlines, what we do is we actually just do when we submit it to the lender, we just submit the mortgage history. We don't submit it with any kind of credit card showing car payments. All they want to see is the mortgage history and make sure there's no mortgage lates in the last 12 months.
What happens if there is a mortgage late in the last 12 months? Does that eliminate the IRRRL?
I believe we can have a 1 times 30 in the last 12 months. We'll need to double check on that, and they may need to look at the credit profile if there's any kind of extenuating circumstances that could be an issue there. But the VA does look at the last 12 months pretty strongly. They want to make sure that there's not any red flags there.
Got it. What is the VA's net tangible benefit requirement?
So they do require that we lower your interest rate at least 0.5%. And then they're also going to take a look at whatever the fees are tied to the loan, that your monthly savings are going to recoup the cost within 36 months or 3 years.
Amazing. Okay. And then how long does a VA loan have to be seasoned for before you can implement the VA Streamline Refinance?
So we need to wait until there's been at least 6 payments made on that current VA loan. So this is a very popular product. With this, we can, compared to the FHA Streamline where you can't roll in fees, with the VA IRRRL, you can roll in fees. So I've had clients who will lower their interest rate 0.5% over and over again, And with the VA rates and pricing, interest rates on VA loans are always lower than conventional loans, apples to apples. So we try to do it whereas we are covering a good portion of the cost or all the cost on these to make sure they're not really spinning their wheels and adding $20,000 onto their mortgage to save $75 a month.
Got it. What happens if the value of the property dropped? Could they still implement this IRRRL?
Yes, so there's no appraisal needed, and once again, they're looking at the lower interest rate on the mortgage payment. That's going to put the veteran in a better financial position, and that's the main point of the program.
Got it. Funding fees, how do those work in VAs for the Streamline?
Yeah, so the general VA funding fee for a Streamline refinance is 0.5%, which is a lot lower than the 2.15% when you purchase the house. Now, if a veteran is exempt from the VA then it's zero. So in most cases, if the veteran is receiving more than 10% disability income, they are in most cases exempt from the VA funding fee, which will make the fees a lot less and make the savings a lot more.
What is a rule of thumb, or is there a rule of thumb whether or not it makes sense to implement the IRRRL once you factor in any cost associated with it?
It will vary. It's case pad clients who like to do it because we can skip 2 months on the mortgage payment and they get their impound account money back from their current mortgage. So while they're adding some money onto their loan amount, they are going to be skipping 2 months on a payment in most cases, and then also getting a little influx of cash. So some people have a general rule of thumb where I want to have 1% on my rate. And then some are like, hey, give me the 0.5% lower on the rate. I want a little break here on my payment. I want to take advantage of it. So it's case by case, but we still have to make sure we meet those thresholds as far as making sure they are saving the 0.5% on the rate and that they will recoup the cost in the 3 years. So we just can't add on a ton of money and for a small savings.
Got it. Okay. Can cash be taken out on the IRRRL?
On the IRRRL, no. So the max closing is $500 or less. So we have to really kind of fine tune the number when we're getting the payoff, when we have the fees, we have the interest per diem. So there's a lot of moving parts there. We got to really make sure we have that loan amount kind of fine tuned so that they're not getting too much cash back.
Got it. Okay. And then what are some of the big mistakes that you see when a veteran is evaluating the refinance options, if any?
One of the biggest thing I see is that people get taken advantage of. So when a loan closes, a VA loan closes, it's public record. So a lot of banks, a lot of online companies, they do mass marketing to anyone with a loan. So any veteran who's watching this will understand when I say this. They're getting 3 to 4 mailers a day with flyers promoting rates that are well below market. And in the fine print, they're charging these veterans 2 points. It's a 5-year arm. They can get taken advantage of if they don't read the fine print. So it's really important to work with someone who they trust, a referral from somebody, and be very leery of these online companies who are sending out mass mailers and taking advantage of veterans, because we see it all the time. They'll promote 4.99%, and when it's all said and done, they're really adding on a ton of money loan to save very little each month.
Yeah. Got it. Okay. Any final thoughts on this? And if somebody wants to get a hold of you, what's the best way for them to do that?
Yeah, the VA IRRRL is one of the best loan programs out there, right on top of the VA purchase. It's a streamlined process, no income documentation, no appraisal, and the rates are much better than conventional. So just if you can take advantage of it, please do. And to reach out to me anytime via cell phone, that's 805-407-5777. My email address is mike@myhomelendinginc.com.
Amazing. So in today's episode, we talked about the VA interest rate reduction refinance loan, better known as the IRRRL. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode would be helpful to somebody, make sure to hit the share button. Michael, thank you so much again for being on the podcast. And to our viewers, until next time.
Thanks, Jose.